Right, hello everyone and welcome to today's session. This is 2022's first Africa Proptech Forum session and we're really honored to be here with you. In our mission to drive efficiencies for Africa's real estate industry using Proptech, it's important to understand, to use an American expression, where the puck is going. This session aims to do just that, empowering us all with insights from some of the tech experts in the space across the world. By way of introduction, we're joined today by the following industry experts. Menno Lammers, founder of Proptech for Good. Peter Clark, managing partner of Redimension Capital. Michael Bremerman, CEO of CRE Tech. And Dr. Daniel Gambero, president of the Malaysia Proptech Association. And he's chatting to us from Southeast Asia at 8 p.m. in the evening. Some quick housekeeping. Your voice is important. We'll have 10 minutes at the end to cover any questions posed during the session, and you can do so in the platform's chat. The format's quite loose. We're going to open a question to a specific panelist with opportunities for comments from the others. Good news, the session is going to be recorded by the team at APF and will be available online roughly 48 hours after video editing by LinkedIn with a link synced through to you. To kick off and warm up our brains, we're going to start off with two quizzes separated by a poll, and the answers will be supported by slides. After this, we'll dive into the following topics, putting roughly 10 minutes to each. They are global and regional Proptech trends, what to look out for in the year ahead. Second, Proptech's increasing role in achieving the famous net zero and ESG targets. Thirdly, emerging markets. Is there a global shift in capital towards emerging market Proptechs? And then finally, how will Proptech fit into global and African real estate company strategies in 2022? For those of you just joining us, welcome again. This first of 2022 session explores the intersection of Africa and Proptech, and we're joined by Menno Lammers, founder of Proptech for Good, Dr. Daniel Gambero, president of the Malaysian Proptech Association, Peter Clark, managing partner for Redimension Capital, and Michael Beckerman, CEO of CRE Tech. A copy of this session will be shared afterwards on APF's LinkedIn and via email. Right, we're about 3 minutes in. Let's move on to the promised quiz. The focus here is on VC funding, the fuel of Proptech. And this is relevant because there are lots of opinions about Proptech funding in Africa. And of good news, as we were discussing earlier with the panelists, some really reliable data. So to quote the famous Jim Barksdale, the former CEO of Netscape, if we have data, let's look at the data. If all we have are opinions, then let's go with mine. So let's go to the data. Our panelists are in the hot seat. We're going to ask a question and have them guess. And please feel free to put your bets in too. We're going to be identifying it on the chat, and I'm going to get a message after this identifying who the winners are. So the first question, I'm going to start it off with this is, traditionally, according to Crunchbase data, Proptech sees 50% of total VC funds raised. So in simple terms, for every $100 of VC raised, $5 goes to Proptech, with, as we know, the bulk going to FinTech. Thanks to data from the Big Deal, Africa has raised over 3 years, $7.3 billion in venture capital funding. So that's from 2019 to 2021. On this 5% ratio, over a 3-year period, we would expect $7.3 billion times 5%, roughly $367 million in VC funding in Africa. The question, how much in dollars did Proptech in Africa actually get? Please post your answers in the chat channel, and we'll tell you after the panelists have finished guessing where you are. So I'm going to start off with Pete. Pete, if you would like to give your number.
$30 million,
Yes, okay.
which is well less than the 5%.
Daniel, how about you? Are you live yet? Fortunately, guys, we cheated, and I got some information from Daniel earlier in yesterday's session. Daniel came in at a steaming $438 million, which worked out to 6% of the total 7.3 billion raised. Menno, I'm going to hand over to you, sir.
Yeah, I hope it will be $376 million at least.
Thank you, Menno. And last but not least, Mr. Beckerman, fresh off the big numbers of USA venture capital.
Well, like all things American, I'm going to exaggerate the number, right, and say it's larger than it actually probably is. So why not? Got to go big or go home. So 500.
Brilliant, thank you. $500 million from Menno. Okay, guys, I think all bets are off. Sue, we're gonna see who the winner is, and while I'm doing that and sharing screens, I'd love to actually you're gonna actually see the numbers. The truth is going to be revealed.
The answer is
a bit of a drum roll here. Wow. Okay. Cool, guys. We're good. I'm just going to quickly go here now. Thank you. Pretend you're not seeing this, by the way. Right, guys. The numbers, courtesy of the big deal, is $29.9 million. Peter's the winner. Well done, Pete.
Thank you.
And guys, the answer that we've got, the closest one we've got, thank you, Susan, is actually $15 million. So yeah, very very pessimistic bet from Africa there, and that goes to. I will be telling you in a couple of short moments. Francis Leopold, thank you very much, Francis.
I want to recount, Will. I want to recount. I don't trust the numbers. The big deal. I want to see I want to see the numbers. I don't want to hear.
Show me the numbers.
Interestingly, guys, so just specifically zooming into 2021, just on 2021, where the numbers should have been, it's a shortfall of $202 million. So yeah, guys, if the 5% Proptech to total VC funding held true, we should have seen a total $215 million in African funding last year. Instead, obviously, it was a low $13.8 million. Because we love numbers here, and we want to give Michael a sense of comfort. This is actually the numbers over the years, and the shortfalls of against what we would have expected. And these yellow dots is actually the percentage of the normal Proptech ratio. So, if we were at 5%, we would have seen $215 million, but instead we were actually at 6% of that 5%. So, like really, really tiny numbers in Africa. Okay. With that out the way, next one is we're going to do a quick poll, and we crudely just putting Proptech funding. I know it's a complicated universe, but we're just going to put into 6 broad funding buckets, and the buckets are construction tech, Proptech for residential tech, Michael's happy hunting ground, commercial real estate tech, platforms, and number 5 is green tech. So remember, green tech is a technology behind achieving net zero and ESG targets. And then number 6, this whole concept of investments and fractional ownership. Drum roll, question. Over the same 3-year period, with a total now, we know the number of $29.9 million raised, which of these 6 funding buckets saw the most money in Africa in order? And again, the buckets, construction tech, Proptech for resi, Proptech for commercial real estate, platforms, green tech, and then finally investments and fractional ownership. While you're busy in the poll, we're going to open to our esteemed panelists and put you all in the hot seat. So Pete, what's your bet, my man?
Ooh, I think I'm going to go with resi, probably at the top, and then commercial, and then construction would be my top 3.
Thank you very much, Pete. Guys, is Daniel live yet, or are we still running with Menno?
I think the platforms, the resi, and the Cretech. I'm with Michael.
Nice one. Michael, your side, what are you betting here?
With all due respect to my friend Menno, great admiration for, because Pete's got the track record, whatever Pete said.
I'll tell you, my confidence isn't as high in this one, but thank you.
Oh, now you tell me. No, I think it's a tough one. My gut says residential, followed by CRE, followed by platforms. I wouldn't think it would be construction because construction's been a laggard in North America. Fractional, same thing, bit of a laggard. So yeah, that's my bet.
Okay, that's awesome. Cool. Thank you very much, Michael. I'm just going to wait, Sue, if you wouldn't mind. So, guys, polls over. While we're waiting for the results to come through, just to give you a bit of data here, which I've held back, but you're going to get it now. We actually saw 3 Proptech deals in Africa in 2019, 3 deals in 2020, and then 9 deals came out in 2021. So that'll just give you an idea of the level of activity. Michael, I think sure. I'm actually going to hand Peter the wooden spoon here. Menno actually won. He came out hot with platforms, which is bang on. This is followed by residential, and then obviously the fractional ownership piece, which nobody expected to come through, but here it is.
Well,
pretty crazy.
Again,
yeah.
I'm very pleased that I followed Menno's lead and said exactly what he said. So it's a very sure bet. Bet on Menno.
Wow. Guys, from a poll, everybody followed. Yeah, I think guys were backing the Proptech, and Proptech came up first. Fascinatingly, by the way, not one investment over 3 years in Proptech, in green tech, or as identified by by Michael here, construction tech. So that's pretty crazy.
That's pretty crazy.
Yeah, so 64% of the money went to listing platforms, 28% went to resi, and then 7% went to investments. Okay, guys, now we're moving on to our next poll, and this is a hell of a lot more complicated. So it's the same as question 1, but now we're using a different data source, right? So another way to predict what Proptech VC investments in a geography should be is to use the global ratio of annual Proptech VC investments, which is a hard number, we know that. Again, I think the chat before with the experts was how reliable are those numbers, but we're going to use Crunchbase's data here. So you get the annual Proptech VC investment value, and then you just link that to the value of global built commercial property assets. So both of those are sort of known. Last year, according to Crunchbase, by the way, Proptech saw $28.8 billion in VC investments, and according to Savills research, the total value of built commercial real estate was $33.3 trillion. Just a bit of a history lesson. Looked at the data here. Going back to 2016, the ratio of annual VC invested in Proptech. So again, we're looking at what's the annual VC investment in Proptech relative to the total value of commercial real estate. It started at quite a low 0.025%. And it's actually more than doubled to almost 0.061% now. So looking at a 4-year average, the ratio is 0.054%. And just to put the number in your mind, that's 0.1%. So that's the ratio. And just by way of housekeeping, for ease of comparison, we focus strictly on VC and we exclude corporate R&D. We also ignore the enormous $259 trillion residential property market. Okay, but back to this ratio of 0.054%. In simple terms, this means that for every $1 million of built commercial real estate around, roughly $536 gets bet annually on general Proptech. Hope that's clear. Now to go to Africa, the total value of Africa's built commercial real estate, and the numbers on show is around $600 billion to $700 billion. So that's the value of commercial real estate. in Africa. Applying this global ratio of 0.054%, Africa should have seen $423 million in VC investments in 2021. Now we know from slide one, the total PropTech investment in Africa last year was $13.8 million. The question is, what's the total underfunding for Africa PropTech over the last 6 years? So what's the total underfunding? Every year we know it's short relative to the ratio. We know the value of PropTech in South Africa, in Africa is $600 million. What's the total underfunded value? And while you're waiting, here's an interesting data point from Savills, which I just had to share with you when I saw it. Just to give you an idea of like this industry that we know and love, the value of all gold ever mined is $12.1 trillion. And that's just 4% the value of global property. So it just gives you an idea of like how massive this asset class that we eat, sleep, breathe is every day. Okay, on to our esteemed expert panelists. Drum roll time. Menno's hot of his last success. Daniel came lucky in the first bet. How we placed on the total value of underfunding in Africa. So actually, how much is African PropTech short in funding over the 6-year period? And I'm going to open up with Pete Clark.
Well, it's a tough number to guess. So consecutive over 3 years. I mean, it's hugely underfunded. We know that. I'll say go for the high guess, $2.5 billion. And the way I like to think of it is basis points, because there's a lot of zeros in these percentages. So the global average of 5 basis points, I think, is a nice number for the financial guys to think about as the spend. But let me go to $2.5 billion.
Nice one. Thanks very much, Pete. Menno?
It's a hard one, man. My brains are blowing out on this question. 1.5 billion.
Menno, you're good. Daniel, your side? Are we putting you in a hot seat here?
Yeah, kind of.
Well,
I just flew from the sky of Malaysia. Sorry for being late, but I had some technical issues. So my guess here is plus minus 2 billion US dollars.
Brilliant. Thank you, Daniel. Welcome. So we've got Pete in at 2.5, Daniel in at 2, Menno in at 1.5. Michael, you've got a chance to win it.
Can you repeat the question? I'm going to try and run out the clock. I'm going to, because the first guess I overshot, this one I'm going to undershoot. I would say $1 billion.
Okay, geez. Cool, Michael. Well, that's again, Michael, American, thinking big, used to big numbers. I think the reality, and I think well done here. This is going to be a foot race between Menno and Daniel. But actually, Daniel, well done. The late arrival, the total number, guys, is $1.85 billion. So over the last 6 years, $1.85 billion. So well done, Daniel. That's the number that we actually underfunded. And just to look at our esteemed, I think by now, yeah, we'll pick up on who the closest was out of our attendees. So yeah, well done there, guys. And now I think this part of the show is over. We're going to move on to actually opening to the questions here. So well done all those bets. I've personally found it absolutely fascinating. Righto. With our brains warmed up, let's get to the meat of the session. And Michael, global and regional PropTech trends, what to look out for in the year ahead. I'm going to ask you straight, like, what do you think 22 is going to look like? We'd love your thoughts on global first, and then maybe you want to hand over to Pete or Daniel for their thoughts on Africa and Southeast Asia specifically. Over to you.
Thanks, Will, and thanks so much for the invite. It's a pleasure to speak to the audience and be with all these esteemed panelist speakers. So just take a step back, Will, just to sort of put it in context, because I am clearly the old man of the PropTech or CreTech industry, however you want to call it. So when I got started 2015 or so, there was this is mostly New York centric, a dozen or so startups, emerging startups. There really wasn't much of a scene. And I think we tracked about 50 million or so that was being invested, mostly family office, high net worth real estate investors. So then you fast forward to what we were talking about earlier, and whatever the number is, 20 billion, 30 billion annually invested in prop tech globally. I mean, that growth is astounding. The other thing to look at in terms of the growth is from a dozen startups to JLL put out something recently where they said there's about 8,000 globally. So that's about a 300% increase just in the last decade. So you've got tremendous capital flowing in. You've got new startups every single day virtually on the scene. But adoption is still very slow and very small in this industry. And there's a lot of reasons. It's not that it's archaic. It's actually the opposite. The industry works extremely well for generations. Great wealth, great cities, great environment, great structures being built, rinse and repeat. It works. Why mess with it? The industry also invests the least in R&D. Typical industries 3 to 5. Real estate's under 1% in terms of reinvesting in R&D, and you don't have the infrastructure. There's just not a lot of professionals on the corporate side, on the end user side, that have the bandwidth, the expertise to be able to vet and adopt these technologies. So you take all of that, and now you understand why adoption is slow, but it's changing, and it's changing fast. And COVID, horrible to say, was an extraordinary accelerant of technology adoption. So here we go. And now what we're starting to see, at least in the North America viewpoint, the vantage point, is that the end user, and again, in my world, it's all B2B, they're saying too much decentralization, too many isolated one-off solutions. I can't adopt you all. You need to integrate. You need to speak to each other. So you're seeing a lot of M&A in the space now as a natural evolution of where we are. So I think that's absolutely going to continue. I think the SPAC marketplace has obviously not fared well for a lot of real estate companies. So I think you're going to see a lot of M&A. I think you will see some IPOs in 22. A couple other trends just that we're paying attention to that I'm very mindful of, this global expansion, like we're talking about today. So yes, while the bulk of the money is going towards North America, Europe, in terms of prop tech, as Menno knows incredibly well, really thriving. Latin America, APAC, African prop tech coming along. So it's really about the globalization, because real estate is such a big industry and all over the world. So I think definitely we're seeing some M&A. We're also seeing these, I don't want to use the word frothy, but these funding rounds are just massive, where in the past, if you saw a $2.5 million, $5 million round, you took notice of that. Now, if you see a $100 million round, it might not even make the press. I think there is, given what's going on in the global economic world, I think you will start to see a bit of a rationalization in valuation. So we're starting to see that. I think also other areas of the industry really coming up, like construction, like property management. And then for me, as Menno well knows, he's been my North Star in this regard, climate. I think climate, in terms of climate tech, in the built world, responsible 40% of all carbon emissions globally, single biggest industry contributor as a whole, 29% operating, 11 or so in embodied, I believe. Menno will correct me. I think that industry is going to be massive and make prop tech, cre tech actually pale size-wise in comparison, because of the scale of the problem and the crisis, and then what it's going to take to decarbonize the built world. So I think those are a couple of the trends that I pay particular attention to.
That's awesome. Thank you, Michael. Pete, your thoughts? Daniel?
Yeah, so maybe I can draw some parallels from that into the South African and the African context, because I think where Africa is, and South Africa specifically today, perhaps where the US was in that 2015 point, where there was some tech starting to get developed. It was a very nascent sector. There's a few guys out there, but it hasn't yet achieved that mainstream adoption. So I think we're at that inflection point where it's really going to grow off this, what is a very low base. And Will mentioned the numbers. There was kind of 3 funded in was it 19, 3 in 20, and I think he said 14 in 2021. So I think this growth trajectory is going to really take off from here. And in some instances, I think we can actually leapfrog a lot of the process that the US and other markets went through, because there has been adoption. We can lean on the kind of North Americas and see what's happened there. And so the problems are understood. There's been a lot of technology already created, and it's how that can be imported and localized into an African context. And bearing in mind the challenges faced by a lot of the built environment in Africa are very different to that in kind of other Western markets. So you don't have as much depth in the market. There's the markets aren't as sophisticated, but that also creates a lot of opportunity coming from more of a blank canvas, using tech as a huge enabler for those businesses. And the paradox is that actually it happens to be less niche, all the operators in a South African or African context, because there's just less market depth. And so you need a kind of broader set of functionality. And Michael, you spoke to all these different companies starting to speak to each other. I think that's where the real value creation will start coming through, is when we can have different solutions developed, which they can speak to each other, they can integrate, and that's really going to enable the real estate community to optimize the use of their assets, increase productivity, and improve sustainability, which I think is a huge theme globally, and yes, relevant in an Africa context, but perhaps not going to be leading the charge as the top of the agenda this year, because there's just so many more basic level solutions which have to get solved at this point in time.
Super practical. Yeah. I'd love to hear your thoughts there, Daniel.
Yeah, if I can add my side, we look at Southeast Asia as a region where property, real estate, property development, construction industry is still very, very, very much a brick and mortar mindset, very difficult to penetrate with a adoption of digital transformation. But as Michael was saying just now, I fully agree with him. In the last 2 years, we entered the pandemic in February, March 2020, with less than 30 members in our association. We have now almost 80, and the number keeps on running. We have been going through a number of pitching competition, becoming more and more popular in the market. There is a huge education that has been done and still need to be completed in terms of explaining how investing in a startup is totally, completely different from investing into a business or into stock market or in a property. This is the local reality in Southeast Asia. Fintech for years has been getting the lion's share, not only here in Asia, but all around the world, for one very important reason: dealing with money, policymaker, institutions, government control, regulators. We don't have them. And actually we are disturbing a longly established brick and mortar industry, such as and professions such as real estate, valuers, quantity surveyors, and many property managers, and so on. If I look at 2022, should be the year of the change, by looking at how it started, January and February, very exciting months. We have in front of us a number of public events with co-participation of industry stakeholders and led all events by Proptech. We are expanding and creating what Peter was saying, integrating solutions. An association is extremely important in terms of pushing the industry towards a faster growth, because connect members, connect solutions, and if there is a proactive participation in the association, an open dialogue on how to integrate, how to cooperate instead of killing each other, is the way forward. If you ask me, I'm looking at 2022 as a very exciting year. I'm expecting really big things to happen, Malaysia and Southeast Asia in general.
Thank you.
You are muted. You are muted, Will. Will, you are muted.
I think there's possibly a delay here. Can you hear me now?
You were totally muted. We didn't catch
Thank you for those words. Thank you, Daniel. A big agreement, by the way, with interoperability. I think that's the way of the emerging market proptechs who don't have the funding, and so they've got to hustle and be a lot more nimble and band together and collaborate. So yeah, brilliant. Next one up, Mr. Lammers. Proptech's increasing role in achieving net zero and ESG targets. Is Proptech focusing on more than the E and ESG? Can you give us concrete examples of how Proptech is actually making this all happen? What are the metrics of impact? And what is the actual impact? So some broad questions. This is your world. We're super interested to get your insights there.
I just have a couple of minutes, so with a lot of big questions, of course. Michael already mentioned it. The whole climate tech part. That's also one of the reasons I started Proptech for Good. Proptech for Good is not only about net zero. We also have to go to net positive, but that's another question and discussion. But on ESG, the environmental, social, and governance side. So one is more the performance, about the environment, social, how to treat people, and the governance, how to manage your organization. And the big thing when I hear ESG discussions, most of the time we talk about ESG in general, and very fast we go to the E, because that's the low-hanging fruit. It's easy to measure. There are a lot of solutions already in the market, so that's easy talking. But we try to avoid, that's how it feels sometimes, all the other parts, so the S and the G, or we talk about the G, but that's only about measuring the E. But when you look at the E, then we talk about waste, greenhouse gases, deforestation. When we talk about the S, we talk about inclusiveness, health and well-being, working conditions. When we talk about the G, we talk about tax, salary pay, anti-corruption, diversity in the management. And I think they are all important, to grow on a sustainable way and to create the future. So yes, Proptech the technology can help to measure, how much waste you're using, how much greenhouse gases you can reduce, reducing the energy and reducing the CO2. So it can give you insights, you can measure it, you can automate processes or optimize things. But also working on a healthy environment. 90% were inside, especially for COVID, maybe it's 98%. And also technology can help you to get cleaner air or better conditions, with the temperature and that kind of things. So it's a more, I see that ESG is more holistic approach, but now more focused on the E. Maybe also the COP26 was part of that, because it was very focused on net zero. So yeah, at the other hand, when you look at the impact side, we know that organizations who are already into that ESG development, they have it's higher evaluation. They get better financial conditions, higher impact on stock returns, that kind of thing. So it pays off, but you have to invest. And that brick and mortar mindset, I always say now it was brick and mortar, finance, that's real estate. Now you get the technology mindset and also the sustainability part. So it all comes together. But there are no specialists who they see the whole picture, and that will be a big shift or reform in the market. So that will also help the S, to develop those people, to skill them up, to give them the tools so they can really make that progress. And of course, there are some great solutions around the world. Mike already called the number of 8,000. Companies who really can reduce your energy by the HVAC system with 30-40%, doing smart waste management. So when the bin is full, you get the signal, so you know when to clean the bin, but also optimize the route to do it on a good way, so you're using less gasoline. But also, simple solutions who make things more accessible on the internet for people who are disenabled. So there are so many things we can do on ESG, and maybe also something to mention in Europe. I'm from the Netherlands. That Europe unveils the proposal requiring business to protect human rights, environment, and value chains. So you can wait for it and say, okay, when the laws and regulations are coming, I will act. But you can also step forward, make steps forward and get things done, because the regulations will come left or right. I know there are a lot of real estate companies who are looking to Europe on specific parts because they know if they want to do business on a global scale, it will help them further. So, and that's also one of the trends I will see, and I will want to add on the previous part, is that there's a lot of interaction between countries. Proptech for Good works together with 40 national Proptech associations. For example, here in Africa, South Africa, Kenya, Uganda. We're also talking in Nigeria. They are having the conversations, so that's good. But also a lot of conversations, for example, with Daniel. He organized an event, and associations from Japan, Hong Kong, Australia, a diversity from Europe. They also bring their knowledge. So that's very important that we keep sharing our experiences, our minds, because we have global challenges, but we also need local solutions.
That's awesome. Thank you so much. If everyone's happy, I'm going to move on to emerging markets question, and I think that what we realized here, pertinent question: is there a global shift in capital towards emerging market proptechs? What is the state now? What explains the state? Will there be a global shift in capital ever to emerging markets? And can emerging market founded proptechs be able to compete in even larger economies? So those are the questions. I'd love to hear your thoughts, Daniel.
Well, I pray hard it's gonna happen. we need big VCs. Last year, April, May, PiLabs did a try in Hong Kong, came over to Southeast Asia, and they just, allow me to say, I cannot say they lost their way, but no listener. The public here, the cash holders, you know that in Malaysia, there are 2-point-something trillion Malaysian ringgit cash in banks. And that cash doesn't move, doesn't come out. And it doesn't come out not only for PropTech. We have PropTech, FinTech, Comtech, EduTech, HealthTech, AgroTech, I don't know how many tech. None of them has been able to attract serious funding. Grab, which is our Malaysian, so to say, unicorn, because it was born in Malaysia, had to move to Singapore to attract the VCs. So the lack of, in the market, in Southeast Asia, emerging market, I feel, is very much on educating the investors, point one. Point two, creating this communicative ecosystem where there is a dialogue, an open dialogue, open challenges. In Malaysia, I consider myself, I look at myself as 80% Malaysian nowadays, 23 years here. I've been localizing myself very much. But one of the things that I say we are lucky is because we have an extremely supportive government. Plenty of agencies with grant on technology, grant on research, accelerator, sandbox, graduation from accelerators, and then further studies for startups, public building owned by Technology Park Malaysia, for instance, made available for proof of concept, made available as a launching pad into a go-to-market move, but still, again, we enter at the funding side, and the whole dream collapse and melt like wax. What we have here, angel investors. We are still on the 3F, family, friend, and fool at the beginning. Very much all of us cash strapped, and then we pray till when the angels are coming with angel investors. Then the whole thing stops there, kind of. Things are changing, but the change is very slow. So I really hope with this big hoo-ha that the association is doing and is creating this repetitive event, mostly is really to be loud enough to be heard from the market. And one of the things that we are doing very, very much, and Menno knows how passionate I am, is to slide into all our events a little bit of ESG, a little bit of SDG in the right way, in the right manner, trying to make the market understanding how better working environment will generate better productivity. And at the end of the day, what is ruling the world? Profit, money. So that is the process that is ongoing here. It's not a fast process. I'm looking at, this year to start seeing a positive move. PyLab was saying Proptech follows fintech. Fintech in 3 years moved from 30 billion USD to 270 billion USD of funding, whereas Proptech is at 30 billion, was 30 billion in 2020 or 2021. So we should be seeing the 200 plus billion within the next few years, a couple of years. Let's hope that a good share fall down like rain, golden rain over Malaysia and Southeast Asia. And of course, Africa. I have had plenty of connection with South Africa and with Nigeria. And I have been finding a situation that is even worse than ours, because at least we have the government supporting us. Nigeria, apparently the government is kind of inactive. I don't know South Africa. I didn't get a chance to explore this, but the institutional side of the market is still hands off, kind of. So we need to join hand, because the more of us joining hand together, the louder becomes the voice, and above all, the more will be the positive experience to be shared.
I mean, I can jump in there from an Africa perspective, because I can echo a lot of those sentiments where the shift of capital is not meaningful in any way. And I think it's evident by Will's numbers that he pointed to up front, just the significant amount of underfunding and very small proportion of venture capital that gets allocated towards the Proptech space. So very, very early stages, but I think we're starting to see a few green shoots that guys are starting to think about it. It's starting to come up on the agenda items. People are starting to understand what is Proptech, and the whole kind of sustainability side is also a big driver to it. So we've seen one or two of the first deals where international money has started to come into Africa. There was recently a deal in West Africa funded by one of the Proptech firms from the US, which I think is positive.
Yeah.
But more than just capital, I think you need, as you pointed out, you need to establish these local ecosystems. So foreign capital can do so much, and of course money is good, but you need adoption. You need local ecosystems. You need the willingness of the local real estate guys to use the tech, for the local regulators to get involved. And so establishing these local and regional ecosystems, which are sponsored by the local real estate communities and markets, is really important. So we're starting to see, I think, some green shoots of that, and writing our own book here a little bit. That's what we're trying to unlock in the African context to some extent. But as you also say, it's somewhat of an education journey and moving people along this road.
I think there's great thoughts, great comments. I would just add, as somebody that's sort of been through this now, and we've seen it in the U.S. Over the past 6-7 years. My thoughts would be, don't wait for it. Don't wait for it. Meaning, if you look at venture money, and everybody thinks, that it's about the dollar. We were kidding, Will, about these numbers and guesses and what have you. That's not really the barometer that you should be thinking about, is how much goes into the ecosystem. Because if I take a step back and look at the sort of Proptech, CREtech sector, 2015, I would say 2012 to 2015, there was no venture money. The first venture fund that we saw dedicated to PropTech was Fifth Wall in 2017. It was a $212 million fund. They're now managing, close to $3 billion under management, right? So I would say, don't wait for the venture money. What you need is, you need everything that you guys have talked about. You need to build a local community. You need to educate the community. You need to connect the community. And what you need is, a few ambassadors in the beginning. Typically, they're going to come from high net worth real estate families that are going to lean in on this and see it as a way that they can invest in a new ecosystem and be on the front lines of change and innovation. And that's what you've got to get. You got to get those early adopters. Recognize with venture, if anywhere from 7 to 9 out of 10 startups fail, venture's looking for an outsized return. They're not coming until they see it. Until they see it, you got to have an industry. You got to have a community. So I applaud everything that you all are doing, because you're building that local network. You're building the network of other associations throughout the world. Keep doing that, but do not wait for venture money to be the savior or the rocket fuel that's going to propel the industry, because I just don't think that's the right way to look at it. There's many, many other tactics and strategies that we saw here in the States that work.
Peter, I cry on your shoulder, you cry on mine. You're breaking dreams. But it's true. One thing that I would like to, if you don't mind, Will, can I ask a question to Peter and somehow to yourself and Michael also? How is the attitude of the old institutions? Because here in Malaysia, for years, we have been there has been a kind of a witch hunt towards tech, above all PropTech, or real estate has to be licensed. Real estate is regulated by an act. Real estate is, you are not PropTech, right? You stay out of the picture. When we are, at the end, we were kind of saying, guys, we are offering you an infrastructure, a technology, a simplified process to do your work. And till now, we are still hammered by somehow part of these old dinosaurs.
I mean, I can jump in from South African side and an African side. And Michael, I agree with you. You can't just wait for the venture money, but it's this education and ecosystem which has got to get created. And to some extent, the venture side can help create some of that closed loop ecosystem if possible. The South African guys, I think, have been fighting a lot of their own challenges, like a lot of these smaller emerging markets with property markets have been challenging. And so their eye hasn't been necessarily on innovation. They've been just trying to fill some vacant space and collect rents, particularly over COVID, which I think, puts your eye on the kind of urgent but not important for long-term value creation, as opposed to the not super urgent but hugely important long-term stuff, which is clearly innovation, and that's what's going to drag you through and really create long-term value. And there was a recent study which showed they just went through the annual reports of the top 5 listed REITs in South Africa to see how many times they mentioned words like PropTech, innovation, technology, and not one of them mentioned PropTech. There was a couple of them that mentioned technology, There's a couple of them that mentioned innovation, some more than others, and quite a wide range in that. So I think that's a very interesting and telling point. But in my engagement and interactions, the guys are generally, it's part of this education, but wanting to be involved, understand that technology can be a big enabler, but trying to see how it's working. And I can draw parallels to where the market was and what Michael's explained, 2012 to 2015 in the US. And we're going to come through that. We're going to go. I think it's coming. And as I mentioned earlier, hopefully it can come a lot quicker, just given the journey that's happened in other places. We can play quite a quick catch up in some of these emerging markets.
Yeah.
Daniel, if I can weigh in, the whole point of tech is just to solve human pain. Yeah. And so if there's enough human pain that you can identify and you can solve successfully, the humans will come. The people won't get caught up by regulatory approval. Those things become insignificant. Provided you can identify pain and solve it, the money will come. And I suppose the challenge with certainly commercial real estate software is that it is such a long journey to deliver value to users that is objectively superior to existing pen and paper solutions. And so that I think is historically for people who it just takes a long time to get to that point. But the second you have that point, the second you're delivering value that is objectively superior to pen and paper solutions, the people will use your product and the investors will flock. So and you don't need supportive ecosystems is my understanding. Yeah. So yeah, it's just tenacity.
And I agree with Michael. I can see a parallel, kind of, trying to get some godfather to join the family. Names we have no really not the Italian style godfather. No pizza connection here. I would say more a tech connection. Then I would listen more carefully. But here in Malaysia, we have some very big, very cash-rich developers, family-owned businesses, even though public listed companies. And we are kind of flirting with them. Yeah. We are trying to offer them more of what they are asked to pay for, because we want to get them to fall in love with us. Then they become our supporters, and the voice that everyone listens. Is enough that they say, okay, this is good. I invest here 10 million, 20 million. Then, as Will was saying, investor will start flocking in.
Yeah, I just wanted to thought that I do want to hear from Menno, because I always can't get enough of Menno's thoughts and ideas. One thing we haven't talked about, I'll just say this quickly, is we talked about venture, we talked about the corporates, we talked about the end users. None of this exists without the dreamers, without the entrepreneurs. We've got to create an ecosystem that young professionals coming from the best schools, universities, the best entrepreneurs, they want to create a solution here. And you need those solutions, right? So I think the other part of building this ecosystem locally for African Proptech and others is you've got to get the young professionals, not just young, not my age, obviously, but that they want to join this and create the solutions, because then there's nothing to support, right? So I can't stress enough how important it is to create that entrepreneurial culture that they want to come in. We have that now here. Menno knows you have that in climate in Europe, where that's table stakes for a lot of young professionals. So can't overestimate or overstate how important attracting the entrepreneurs is. Menno.
Yeah, agree, Michael. You know, we need the dreamers, we need the rebels, the troublemakers, like Steve Jobs said. You know, we really need them, because when we look at the real estate industry, we are facing so many challenges. You know, if it's not the tenants who want something from the real estate, then it will be the lawmakers, or the public, or there will be new companies coming into the countries. It's so important, to discuss and to bring in missions and challenges and big impact projects, which are really making a positive impact on the world. And if we only say, yeah, we're going to reduce 10% of your energy, no, the moonshot, I call it Earth shots. We have to do something on the Earth. We went to the moon, a lot of innovation. We saw how fragile the Earth is. So we need Earth shots, big challenges, bring in the talented people. And I know in Africa, I met already so many people in Africa. I really, they are so great, entrepreneurial, and bring them together, let them think. It's so easy now to start a company, to do something with tech, and there's so much network, you can activate to bring things together. So we need them, the talented African people, the talented people from Malaysia, the US, let make the planet a better place, because we are a degenerative industry, and we have to go to be regenerative to create more positive, bring more positive than being negative, because that's not the future for our children, for the next generations.
Inspiring stuff. Thank you, Menno. Last question, guys. Pete, you're in the hot seat. How will Proptech fit into global and African real estate company strategies in 2022? And what we're really keen to hear is rational specifics. Everybody loves these buzzwords, AI, ML, IoT. Our view is until the brilliant basics are resolved, these buzzwords will simply just be band-aids on festering wounds. What are your thoughts? How's this going to happen?
Thanks. Well, I'll go through it pretty quick because I think we've touched on a lot of these points. But globally, I think the adoption is very clear. You can see what's happening in the US, and I think Michael's alluded to a lot of it, where real estate corporates have really fully embraced and adopted and engaged with the Proptech community, innovation. They've supported the big platforms like the Fifth Walls, the Meta Props, the Pi Labs, all these guys who are investing and helping bring this innovation to the forefront. So it's very clear, and it's there, and their problems are quite specific, and there's a lot of guys chasing after those solutions. In the African context, it's still behind. I think guys are, as you say, they're still trying to get their heads around it to some extent, and they're trying to sort out the base layer, because if you don't have a digitized version of your lease and you're still working on paper, it's very hard to then start integrating with other APIs and getting other technology or innovations involved. So there is this kind of starting point where guys are recognizing, okay, let's start working at the bottom, let's sort out the house, get it ready for growth and to adopt that innovation into the businesses. So I'd say it's very early stage thinking. It's not yet top priority, which is also just given the fact that the markets have been somewhat more challenging, time has been allocated elsewhere. But we're starting to, as I mentioned earlier, come up the priority curve. And speaking to Menno's point on kind of the ESG side as well, that's certainly something which wasn't on the radar pre-COVID. It was a bit of a nice to have, which is starting to come front and center to everyone. They got to think about social responsibility. They got to think about the environment. And we're seeing a lot more of that come through. So what are their SDGs and who's going to help them get there? In the African context, of course, the social side is huge. On the environmental side, it's also a big problem in emerging markets. And you can think, I can't remember the exact stats, but it's, in a place like UK or US, I think by 80% of the buildings that are going to be there in 2050 are already built. But the stats in an African context is completely skewed the other way. There's going to be a lot more development activity. So we've got a huge amount of embodied carbon, which is going to get built out. So it's actually going to benefit the most from those kind of big thinkings. What is going to be new construction techniques, whether it be modular construction, what's going to be the new concrete, so on and so forth. And then you've also got initiatives and legislation coming into places. In South Africa, they've got the C40 initiative, which the big four municipalities have adopted. And they're looking for net zero buildings, all new builds by 2030. And so South African property companies are going to face the same challenges as the guys in UK, US, which have committed to very similar legislation. So I think it's certainly rising on the priority list, and not yet mainstream, not yet the number one item, but in the EM, it's creeping up. It's creeping up.
Right, guys. Hopefully I'm not on mute. Thank you very much, all of you. It's much appreciated, and just such a great opportunity for people from. You look at the globe, the far east, the far west, in between, up and down. Just a real pleasure for us all to connect. Thank you for your insights, and thank you for your valued time on behalf of all the attendees. It's been really, really cool. Just keep picking your brains and figuring out what the future looks like, which is
Really
super
enjoyed
exciting.
it. Really enjoyed
At
it. Will.
any
Thank you.
time, you're very welcome.
Great to talk to everybody.
Fantastic. Thanks, everyone.
Very
Good to
much.
see you all.
Very,
Thank
very.
you.
Thank you. And keep in touch, all of you.
Earth shots.